Hello and welcome to the final Property Roundup show of 2023 here on iPropertyRadio with myself, Carol Tallon. The show where we chat to industry experts to get a view on what's happening on the ground and to learn about new trends emerging. This show is sponsored by daft.ie, Ireland's most visited property website. Today, I'm delighted to be joined by returning guest Sean Corbett, mortgage manager with SYS Mortgages. Sean, thank you so much for joining us today. I suspect you might have been one of our first guests of 2023, and now you get to be one of our final guests of 2023. And I hope you have some positive mortgage news for us.
Yep. Hi, Carol. Yeah, no, it is. And there is some positive news on the horizon, thankfully. It's been a quick year and lots of ups and downs, but we'll try and finish on a high.
Well, look, certainly for the frustrated would-be home buyers here, whether they're first-time buyers or those who are anxiously waiting to trade up or down, hopefully there'll be a bit of good news, because I know in previous conversations we've spoken about the lack of competition in Ireland's mortgage market, and there are some moves towards improving that. But just for anybody not familiar, you might just tell us a little bit about SYS Mortgages and maybe what the offering there is.
Look, we're a mortgage broker, SYS Mortgages, but we're fairly unique in that we do a complete online offering and keep everything paperless and as simple as possible. I.e., we have experts from the start of the mortgage process right through to when we move you into your home. So it's a complete hold in your hand experience, as much as you want your handheld, and that's what we offer. But all the time, tailor making a mortgage to your needs rather than it's not all rate driven anymore. It's about how much do you need to borrow, who will give you that amount of money, how quick can you get it, and how quick can we get you into a home. So that's our offering, really.
Very good. And while I know you're based in Limerick yourself, SYS Mortgages is operating nationwide, and I suppose that's one of the values of an online service as well. So you might just give us a little bit of maybe insight into who's buying at the moment, because the most recent report from the Irish Mortgage Federation showed that first-time buyers are by far dominating the mortgage market, which I think is only to be expected. But I suppose just from your own insights, can you delve a little deeper into those demographics?
It is still predominantly first-time buyers, and thankfully people building homes now as well, because the lack of properties in the marketplace, people are actually going out, and I've seen a good number of even the trend has bucked a bit. Your typical self builder has been somebody who's been gifted a site. There are a number of people now actually purchasing sites, so it's a bit new to the market. The switcher market seems to have died off a little bit in 2023 compared to 2022. People seem to be sticking with their own banks because of the costs involved in switching. Now, that may change, and I think it will change in 2024. But yeah, predominantly, look, subsequent buyers and first-time buyers. That's been the marketplace in 2023. But the lack of property is still a huge problem.
Yeah, and look, that's something we document almost every week here on the show. Any investors, any buy-to-let investors getting finance?
That's slowed down hugely, and there's more people getting out of that market than getting into that market. And the reason being, your typical buy-to-let lenders, Finance Ireland and ICS, took themselves out of the market. They are still operating, but their rates are sort of, you're up near the 7% now. So you'd want a very good yield on your property to make it a viable investment now.
Yeah, and Sean, unfortunately, that is wholly consistent with everybody we've spoken to across, from the investors, from the Irish Property Owners Association, from the mortgage perspective, and from the estate agents buying and selling. There are just very few pockets in the country that are seeing any investor interest, and that investor interest tends to be cash buyer or through their mortgage or through their pensions. So it's a reflection of the marketplace right now, and no doubt a reflection of the policy by this government. And it is difficult to see how any likely change in government in the coming year would make that more favourable for investors. But obviously, time will tell.
No, and it's a double-edged sword, isn't it? Rents are going up because there isn't enough people buying investment properties. But on the flip side, it makes more properties available for first-time buyers who need these properties to live in and pay a mortgage. So yeah, it's a perfect storm, isn't it?
Yes, but we do need those home buyers to be able to save for their deposit, and they can't do
Yeah,
that if they're paying escalating rents. But so it feels very much like a vicious circle. And it's interesting. I spoke with Daft.ie's economist Ronan Lyons in recent weeks, and he had some glimmer of hope for home buyers about new stock, new home stock, and how that might actually increase some of the second-hand properties and hold prices at a steady or perhaps even lower rate. But while there might have been some ray of light for potential home buyers, he described a rental storm brewing across the regions, and he felt that while the rental situation might actually improve in Dublin, it is likely to get much, much worse across the regions before it gets better. So it looks like we have a few years of those challenges ahead of us, which I think is very bad news for anybody who is renting or has to change their rental home before they're going to be in a position to buy a home in the next couple of years. So that's still a problem. But I'm interested in what you talked about self-builders, because self-builders have had challenges getting mortgages, and it's an interesting trend if we're looking at self-builders who do not even own their own site or actually are buying the site separately. So you might just talk to us a little bit about that.
yeah, and there has been challenges, and people don't realize it's not as simple as going out there and getting a mortgage for a self build. People don't realize Bank of Ireland. If you're building and your build cost is less than €1,900 per square meter, they will not give you a mortgage. Permanent TSB, €1,600 per square meter. If it's less than that, you will not get a mortgage from Permanent TSB. So they've shifted hugely with this cost of everything going up. So they don't think you can build a home now. So to build a home is gone as expensive as buying a home. The added advantage is if you're gifted a site, and you mentioned renting there, that is your deposit. So you don't have to bring potentially any more money to the party. The lender will lend you 100% of the build cost. People buying sites or sites, I've seen site costs going ridiculous money now, 100k, 150k the nearer you get to cities and things, and you're having to fund the 10% deposit for the site, and then you're having to fund the 10% deposit for towards your build costs and so on. So it is tricky when you're purchasing a site and building, because you can't just go out and purchase a site without having the full plan in place, i.e. you're going to purchase the site and you're going to start the build project, because there's no lender who will lend you money apart from the credit union to purchase a site. So yeah, look, it's you definitely need expert advice when you're getting involved in a self-build project, because it's you'd have a relationship with me for about 2 years, and we don't mind that relationship. That's fine.
That's a fair warning for people. I mean, it's not something that I'm happy about, and I know that we are long awaiting the guidelines on one-off rural homes that the Department of Housing is due to issue to the local authorities, and we have heard a whisper that that might happen this side of Christmas, and that in itself is worrying, because if it's coming out this side of Christmas, it means it's something that definitely needs to be distracted by twinkling lights on the Christmas tree, and that's a real worry. But look, again, we won't preempt what's going to come out from the housing department, but we will certainly be keeping a watching brief on that. Sean, do you have many people who are taking on renovation projects? Like we talk a lot on the show here about tackling vacancy and dereliction. The grants have been recognised now as really unworkable for the majority of people, so they are being restructured slightly. Have you many mortgaged applicants who are coming to take on a second-hand property project, bit of a DIY, and have been able to avail of grants alongside their mortgage?
Yeah, you've hit the nail on the head. I've seen some wonderful properties in 2023. It's yeah, cow sheds. You wouldn't put a cow in them. It's not to mind, but they are very popular because of the lack of properties out there. Now, the derelict house grant is the hoops you have to jump through to get it, and I've seen one person in 2023 actually getting their money back and after completing the project. Now, they did a fabulous job on the property, but Yeah, the reports
And
that had to be got, and
Sean, I have to stop you right there because you mightn't be aware, but actually, every single time we've talked about this on the show in 2023, I have asked the guest if they have direct experience of anybody availing of this. And every single person has said no, despite having numerous inquiries. Now, I'm talking about solicitors in the Midlands, right down to estate agents up and down the Wild Atlantic Way. So you're the only person who has had the experience of somebody successfully drawing down one. So that makes us literally one in all of 2023 for the hundreds that we were spoken about in applications.
no, the only reason they were able to do that is because they had money behind them to actually get the works done. And only recently I found out they did actually get the money back now by way of the grant. And they've done a fabulous job on the house, I must admit. When I first saw the mortgage application, I thought, this isn't going anywhere. But the amount of work that went into getting that mortgage approved, and it eventually got approved through Bank of Ireland, but to in and froing, it was a minor miracle. So if it was Christmas, it'd be a miracle. It was done in October, I think September, and
Yeah.
they actually got the money back and did a fabulous job. But it's the only one I've seen. The only one.
Sean, just for people who are listening in who are so frustrated by trying to access this grant, you mentioned they'd money behind them. Can you share with us? Did they get that from their credit union, or did they happen to have that pool of cash?
They had that pool of cash, luckily, because you can't get it from the credit union, because if there's additional borrowings on top of the mortgage, you probably won't get the mortgage. And people think these grants are brilliant, but everybody forgets that the work has to be done before the grant is released. So and you have to have the borrowing capability to get it. And yes, you could take typically do a doer-up mortgage, borrow the extra money, but then it's done in a drawdown phase, it's done in a holdback phase. So you do need money behind you. You do
Yeah,
need money behind you.
we've actually spoken to vacant homes officers in local authorities around the country, and though when pushed, they do say that, listen, the only ones they've seen where it's workable is where the derelict property is owned by family and they have a pool of cash, so that they're not dependent on mortgage. But just for anybody listening in, I would tell them to, if this is something they're interested in, maybe go on to the Housing for All website, because there have been changes made, and actually the local authorities will be in a position to consider home loans in terms of for both purchasing the derelict properties
Absolutely.
and for carrying out the works where it looks suitable for one of these grants. So that situation has changed. I don't want to be overly negative. Tell people, I really want people to know, do check out the Housing for All website and see what changes have been made in the last 6 weeks, because they are important and they will help potential home buyers. But I suppose back to the mortgage side of it, something you and I have discussed in the past, Sean, to my frustration and probably yours as well, is the lack of competition in the mortgage market. Has that improved at all?
Yeah, it has been a disaster, because you've obviously you've had the like of KBC, Ulster Bank leaving the market. You've had Finance Ireland and ICS taking themselves out of the market because the cost of funds for them, because they're not a bank, and we're left with a dismal amount of lenders who can pick and choose who they want to lend to. Now, hallelujah! In the last 3 weeks, a company called MOCO, MOCO. They are actually a bank. They're backed by a bank, Austrian bank, and they've come to the market at long last. Now they've been trying to get into the market for the last 2.5, 3 years, and got authorized by the central bank, and now they've launched into the marketplace, and they're a very forward-thinking lender, which is great. And it's what Ireland really, really needed. I.e., you talk about people not having a deposit, they'll take 100% gift. So if somebody's got a 10% gift from a family member who's lucky enough to give it to them, that's their deposit sorted. They'll take all sorts of incomes, and a good share of bonus income. So people in the car trade, people who are in commission-based incomes, they'll take a good share of that income. And all I can describe them is the way that Finance Ireland used to be. Finance Ireland are out of the market. We've now finally got a lender that's come back into the market who's really looks at an individual circumstances rather than one size fits all. So they will consider everything on a case by case basis. But the real attractive thing for me from MOCO is the level of income that they will take from an individual. And for public sector, they'll go up to 2 points up the scale as well. So there is something in it for public sector. So it's much needed.
That's
much needed.
When you say forward thinking, what I'm hearing there is that they're actually going to hopefully acknowledge the reality on the ground, which is that not just in Ireland, but globally, we're moving towards the gig economy. So you've got people who are self-employed, essentially contracting for the same company for a long time. And these are people who've really struggled to get mortgages in the past. So are they taking a more open-minded and maybe market reflective approach to that?
100%, and very much, looking at the contracting market, looking at somebody who's self-employed rather than just looking at a net profit or what somebody draws, looking at net profit, drawings, depreciation added back in, and so on. So really looking at what can you get somebody? Because as I said before, it's not all about rates anymore. Their rates are okay; they're between 4 and 5%, which is okay. It's standard out there at the moment. You get €1,500 back, help with costs and so on. So they realise the costs involved as well with solicitors. But yeah, really, even looking at job hoppers, i.e., if you're staying in the same industry but you change jobs and you've changed jobs and you're on probation, they'll even consider while you're on probation in the new job. And so on, or teachers who've gone out of Dublin because it's so horrifically expensive so they're 15 years service in Dublin, but now starting down in Cork. So effectively giving up that position and now maybe going into a school on a new contract. So you're not CID'd straight away. They'll consider that straight away as a mortgage. So yeah, that's what I mean by forward thinking. It's what we need it. Not just getting a straight decline and come back in 2 years' time when you've been made permanent,
Fantastic. So say one of the examples that we've discussed here on the show is for people who are self-employed and you have to show up to 3 years, and that's been really challenging this year because COVID was impacting kind of the bottom line when you look at 3 years accounts. So how many years accounts do they require?
Two. Which should overcome the COVID thing. And look, I'd always argue with a lender, if somebody's had a really poor year with COVID and now they've had a really good year, would you not just look at the really good year on a case-by-case basis again? Or look, if they were self-employed long enough, look at what was happening before COVID, what's happening now, and what's projected income for this year. So there is, look, yeah, lenders really need to get a grip now and not just the computer says yes or no. It's you need an individual to look at an individual circumstances, and that's the refreshing thing about MoCo is they have a credit committee, and you can talk to people even though they're a computer-based system and they do open banking and everything, all the wonderful stuff to get you a mortgage offer really quickly, because they'll go to mortgage offer rather than approval. So you'll get a mortgage offer within a week, even when you apply to them, even if you haven't found the property. So when you find the property, they're super quick. Then you go to valuation and off you go. So
fantastic.
So this is what the market needs. We need innovation. We need innovation.
It's funny you're saying we need innovation, but actually what you're describing is probably the way mortgages would have been assessed years ago, like 2 decades ago, when it was being done at an individual bank level. So it's interesting, so often we talk about innovation in terms of the IT systems and the technology supporting it, but actually there's something quite radical about bringing the human touch back into this process.
Absolutely, you need a human at the end of it to look. Yeah, it'd be wonderful if every application, i.e., I get the customer onto a system and we're on the system, we key everything in and hallelujah, green light. But it's not always a green light, and it's great then to have a process where you could say, look, maybe it should be a green light because of X, Y, and Z, and that's when an individual comes back into it. Yeah, it's look, there's we need a shake-up. We need a shake-up, but hopefully this is the start of things. I've heard that SYS Mortgages are going to come back into the marketplace hopefully early next year, and Finance Ireland, I've also heard, will come back into the market early next year. So
very good. And the credit unions, of course, have been very vocal about their ambitions. In fact, in a radio interview only in the last week or 10 days, I heard somebody, I think from the Irish League of Credit Unions, talking about the mortgage ambitions, and that essentially a decade from now, they imagine a time that 20% of all mortgages in Ireland could be could be available through the credit unions. Do you think that's credible? Is it likely? Would it be good for the consumer? Is this something we want to see?
Yeah, any competition is good for the consumer, and credit unions have been out of the mortgage market for far too long, and that was the issue. They got badly burned after the last downturn, and thankfully they're back in. And even though I can't put somebody with a credit union, there is a home for people within credit, and they're competitive at the moment. They really are very competitive now. They really do need to get into the fixed rate marketplace and offering maybe some really competitive fixed rates and things if they want a 20% share of the market. It is ambitious, and a lot of lenders have come into the market thinking they'll get a 20% share, and they haven't managed to get it. But there is enough credit unions. It's a bit like GA clubs, isn't it? There's enough credit unions in the country, so they've got a massive coverage. So I don't see why not. 20%, yeah, it's and they've got plenty of money. It's
Yeah.
they're super competitive at the moment, and again, they're a bit, as I was saying, there's individuals involved, isn't there? It's not a computer says no scenario,
Yeah.
and they're hungry to lend out money, and the central bank needs to allow them either lending limits and so on, because that was the big problem with the credit unions, is they couldn't lend people enough, and that's why they weren't getting so much into the. Now they can, and yeah, look, watch this space, I guess.
Yeah, well, I mean, for me, it almost comes back to an even more core issue, which is that the credit unions were set up to serve people where commercial banks mightn't have seen it as mightn't have made the commercial decision to serve them. I think they're there to serve the local community using community funds, and I think being able to leverage community funds. I think really, over the past decade, we've seen the approved housing bodies leverage funding very, very well to serve local communities, and I think giving credit unions the opportunity to do something similar could be transformative, particularly for the regions and for rural areas. So that's something I'm quite excited to see, and I hope they can deliver. And I know you mentioned that, they maybe got burned during the crash, but the reality is there was a lot of second charge lending at that point, whereas actually being the primary mortgage lender would put them in a very different position in terms of security. So, it shouldn't go back to a time that like it was. But look, again, something serves the local community. I think they're really well placed to do it, and they're trusted, and the trust factor can't be understated. Sean, I'm very conscious of your time, but there's two things I suppose I just want to fly through with you very quickly. Me as not a mortgage expert, when you say the rates almost isn't the important factor, that sounds almost counterintuitive to me. What do you mean by that? Because all of the mortgage conversation over the last 12 months have been around increasing interest rates. And while we're expecting those increases to slow in 2024, still feels like a big consideration. How are your applicants feeling towards that?
People have got, how can I put it? They've become sort of complacent towards the rises, because they were so frequent and happened so frequently in 2023 that people just took it on the chin, really. I saw when rate rises first started in 2023, somebody would be with one lender and they'd want to switch to another lender. People have stopped doing that. They've got approval. It was so painful to get approval from some lenders that you've got your approval. They've put up rates by 0.5%. Look, I'll stick with it. And all the time in Ireland where you've got rents that are so horrifically high, mortgages still are good value, even at 5%, if they went to 5.5%. The true value of paying a mortgage on a monthly basis compared to paying rent, you're still making a huge saving, So that's where it's people are more interested in how much can I get and how quickly can you get it for me now, because rates are similar. Look, Avant Money still have the best rates in the marketplace. I question how long is that going to be around. I would imagine you'll see a movement there in early 2024. The other lenders seem to have slowed down slightly on their rate increase, and hopefully things will keep in tune now for the first quarter of 2024. I would hope. Even recently, Permanent TSB, PTSB as they're known now, I wouldn't have called it, but they put up their variable rate by 0.6%, but they brought down their 4-year fixed by 0.4%. So a bolt out of the blue. If you ask me, were permanent PTSB going to reduce their rates before Christmas? I'd have said I'd have lost my house because I'd have put a lot on it. It's
yeah. Yeah, well, and I suppose these are just some of the market dynamics that home buyers are having to navigate. I suppose you call it complacency towards the rate sensitivity there. I would say it's probably not complacency. I think it's more a feeling of powerlessness. And one of the ways to counter that feeling of powerlessness across consumers is to introduce more competition, which we know is happening. So I suppose, Sean, finally, just for anybody who's listening in and considering that maybe 2024 is the year they're going to hopefully start looking, or maybe purchase a home or build a home, or maybe take on one of these project properties, that now that the conditions have been slightly improved in terms of accessing grants, what's your advice for people who might be considering this in 2024?
Start planning now, really. It costs you nothing and it shouldn't cost you anything to go and have an initial consultation with a broker. See if you're on track, and work out a budget in your own mind, i.e., what are you happy to pay on a mortgage on a monthly basis? Because that will determine how much you need to be putting away, coupled with rent, to do something called repayment capacity for a lender. And that is the single biggest hurdle I've seen for a lot of people in 2023 when rates started to rise. They had a savings pattern, but because rates rose, that savings pattern didn't fit the lender any longer. So they're having to then go away and revisit that. And the great news is lenders only look back over 6 months. So you can do a lot in a 6-month period. If you came and spoke to me, and you want to borrow 300,000 euros, I'd tell you how much that's going to cost: 1,500 euros per month, just an example. But you're only saving 1,000 euros per month. I'd give you a plan as to, one, is it possible for you to save 1,500 euros a month? And if it is, then save that on a regular basis. Or if you're paying 1,500 euros in rent per month, tick the box, and you could actually apply now. So the trick is there's no ideal time, Carol. People ask me all the time, when should I buy a house? You should buy a house when you think it's right for you, because the one sure thing over the next 25, 30 years is that house will go up and down in value, but hopefully you'll have the keys, you'll have the deeds in 25 years' time, and you'll have an asset that's worth more in 25 years than it is today. So that's,
Sean,
get out of the rental trap, because nobody wants a notice from a landlord before Christmas saying you have to get out by the end of January. That's a disaster. If you want to paint your house pink, paint it pink, because it's your house. So,
Sean, I think that's some really great advice for people, and it does give a glimmer of hope as well, which we absolutely want to do on this, our final show of 2023, and no doubt we'll be speaking to you again in 2024 to check out what the trends are like at that stage. But for now, that's all we've time for. That was Sean Corbett, Mortgage Manager at SYS Mortgages. My thanks to producer Katie Tallon and to the production team at Hear Me Roar Media. Also, huge thanks to our show sponsor, daft.ie, Ireland's most visited property website. And also thanks to you for tuning in all year. We hope all of our listeners have a wonderful Christmas and a happy new year. We'll catch you on the next episode of Property Roundup in early 2024. In the meantime, please be sure to check out all of the other Irish and international real estate and construction shows on iProperty Radio.